Good morning, traders, and welcome to another live trading webinar. I hope everyone is having a great time so far. So our risk warning, as usual, this content is for general information only and is not intended to provide any kind of advice and personal recommendation. So let's go straight to the chart. Markets got a little bit busy yesterday. I'm going to come back to some other stuff later on. Maria, Julia, Mr. Carlos, Nicholas, and Mogil. Good morning, everyone. Good morning, all. And Elena said, good morning. How are you doing, Elena? So, guys, let's start with the pound against the US dollar. And let's bring the drawing tool. Bear with me. So that's the daily chart. Yesterday we spotted that a strong resistance here held the price 2 days ago, and since then yesterday the market moved a bit lower. Also earlier this morning during the Asian session, the markets, they were adopting the Great British Pound, therefore it's on sell-off. Now, what can we see on the lower time frames is that's a 4-hour chart, and since yesterday, the London session, the pound sold off, and then it was just recovering a little bit until early this morning. Sellers, they continue the selling pressure here. And this reveals some interesting about the market. Remember, yesterday, whoever had the chance to participate on the webinar about trading psychology, I always say that always when we're trading, we learn two things. We're going to learn either something about the market or something about ourselves. Now, if you pay attention to this market for a while, you understand that the Great British Pound sold off from 8 a.m. to 12 p.m. broker time. So pretty much an active London session, an active London trading session sold off the pound. During the New York session, it was this candle here. The market didn't make any directional move. Oppositely, they were pushing the price a bit higher to take an opportunity and sell from as high as possible. So all the market participants was kind of in alignment that, hey, we're gonna still selling. And remember what I told you about these long candles. Whenever you see these long candles, and if you start monitoring the price action within the 4-hour long candle, you're going to see some small price action appears after that. That's a strong indication that the market is going to continue to this to the downside. Here, the same small candles after a long 4-hour candle, and the market sold off. Same here, same there. This pattern, if you try to trade along this pattern only, you have a high chance of success in the market. Next one, Euro US dollar 4-hour chart. Yesterday, price stopped and reversed from this area of resistance. So on the lower time frames, let's say 15-minute chart, the traders who are trading order block setups or lower highs, lower lows, price made this move here with let's say slight negative divergence. But the important thing is early this morning the market made a new low, and that's the first confirmation that likely we're gonna see a pullback and then a continuation to the downside. Now, there is a strong area of demand here, so the room of opportunities from there to here. So if you are holding sell positions here, manage your risk accordingly. Maybe the market will do this and come at this area of resistance, and from there to continue to the downside. Okay. Next one. Australian dollar, US dollar. That's the daily chart. Price stopped yesterday with this dodgy inside candle at this area of resistance. Early this morning, it gives some directional move to the downside. We are still shorts on this one. New Zealand, US dollar, that's the 1 hour chart. As you see, it continues moving lower. USD JPY, that's the weekly chart. Remember, we explained yesterday that the market is in an uptrend on the weekly chart. Also, the price action. There are two things we want to look at when we screen for the big picture. First, we want to see the overall market if there is a structure. There is a structure, and we identified that there is an uptrend. That's cool. But then we have to also see the price action, how it behaves. If the price action is very choppy and it's kind of inside within an inside candle on the weekly chart, you need to pay a close attention to the daily or the 4 hour chart to find the strongest price action signal to trade if you want to buy. Otherwise, you can't afford to trade inside candles, in my opinion, during an uptrend when the market is in a sideways on the weekly chart. Okay, when the market is in a very clear defined uptrend with higher highs and higher lows on the weekly chart, then on the daily chart, yes, you can trade the inside candles, but preferably try to stick with bullish engulfing and hammers and some dragonfly candles. On the daily chart, though, I said that I would prefer to see a kind of double bottom on the 4 hour chart right here before I buy, and I didn't participate in this market yet. I would like to see some kind of rejection, again a double bottom, before I initiate any buy position. Now, likely you're going to ask me why you want to do that and why you are so fussy about that. Because the weekly chart is already overextended. It's overextended. It moved away, far away from the moving averages. Lately, we see the price action is not that strong. And at cases like this, where price action is not that strong, market likely it's going to reverse. It's going to create a correction, not reverse. We're not talking about the reversal price action. Next one, USD Canadian dollar. So I will prefer to pretty much on the USD JPY to stay away. I could get involved with the pound, with the euro, and maybe with the Aussie to sell it today rather than try and buy the USD JPY. Next one, USD Canadian dollar. Weekly chart at this area of resistance. Daily chart, that was an inside with a false break to the downside, but good enough to help and initiate some positions. The 8 hour chart, nothing. 4 hour chart gave some lower highs and lower lows, okay, but it's very steep as we see. Back to the daily. So it's still, we close below, price closes below this 20 moving average. So expectancy is to see continuation to the downside. Next one is the USD CHF. I'm just staying away from that because really is, although there is a strong area, kind of an ordered block here, if you like, there is a strong area of resistance. If we zoom in on the daily chart, we can see, let's say this one is here, that's there. If you want to go to the 4-hour chart, oh my God, really now? In trading view, it's much easier. Sorry, guys, but what to do? That's what we have now. So it's somewhere like this, somewhere like that, a strong area of resistance. So we do expect it to see now. Again, let me make it clear. When we identified some structure on the higher time frames, we are not obligated to trade the higher time frame itself. We can go to the lower time frame and find some kind of catalyst and try to take even 20 or 40 pips out of the market. We don't need to get in here and work it all the way down like this one here. Maybe we find a strong market structure, consolidation, break below. Maybe we got involved for the next couple of days as an intraday trader and nothing else, because really we don't know when the market is going to stop trending, right? So every time, write this down, every time a trader enters in the market, buy or sell, always has this question of if the market is going to keep moving on that direction, because we use the past data to predict the future. That's what technical analysis is. And there are some strong statistical trading patterns that they work all these decades and hundreds of years, because human behavior stays the same. That's why they are repeatable patterns with high quality of trading setups. Now, someone asked, what is an order block? An order block, in a few words, it's the last trading area before the market makes an impulse move, before the market creates a direction. So you see a downtrend, the last bullish candle, let's say prior to the downtrend, it's a block. That's why they call it order block, because it has an accumulation of orders that force the market by the institutional traders and the big hedge funds to create this move to the downside. There are some patterns like the bearish engulfing in a downtrend, and patterns like the shooting stars, or the gravestones doji, that they really are exceptional trading patterns. Not only price action patterns, but as well to identify these order blocks. Euro JPY, that's what I was talking about, the messy chart. First, traders, what do we want to see? We want to see direction on the higher time frame. I repeat, if your higher time frame is the 4-hour chart, you do the same process. I want to see direction on the higher time frame. My higher time frame is a weekly chart. So direction is up, clear. Market makes higher highs, higher lows. But because we are not investing and we are trading here, we want to get in and out of the market as soon as possible and as fast as possible. So we need to use another filter. The direction is one, but what is the price action doing in the last few weeks or in the last month? It's just moving sideways. You can see it doesn't have higher highs and higher lows. So that's what we see on the higher time frame. Now, if it doesn't have a sequence of trading character, why should we go to the daily chart and try to find here? It was one strong price action, right? But the room of opportunity was up to where? It was maybe up to here. But by the time you are entering the market with this hammer, you wouldn't even think to pay attention to what's going on, that the market is not trending anymore. You just get caught by the support and the hammer. But it's something beyond that. We have to understand if there is a trending price action character in the market. Okay, by not seeing a trending price action character in the market, the probabilities to enter a trade and play out fast are very low. Can this trade work out in your favor, in our favor? Absolutely, yes, absolutely. But what's the high probability of this market doing at this point? Maybe to keep moving sideways. I don't want to be the trader that it's going to create, let's say, the move in the market. My funds cannot create the move in the market. But also the matter of fact is, every impulse move, every directional move, it will start to the upside from a level of support, to the downside from a level of resistance. Now, there could be multiple attempts to buy this market. Here, an attempt. Here, an attempt. Here, it's another attempt. Now, if you're going to decide that you're going to play out this strategy, you better be consistent, because it has a low probability of success, but a good winning ratio, a good reward to risk, a high reward to risk. So you better understand what kind of trader you want to be. Try everything if that's what you want to do, and at the end, find out what works most for you. All right, Roland, Mladen, Ruben, Larry, X-Man. Hello, guys. Larry, please explain what is an order block. Okay, I hope you understand it. We explain. Mr. Nix, said hi to everyone. Krebasti, good morning, guys. So, guys, just in 1 second, please. Let me go through the these PowerPoint slides just to make sure you know where to find the weekly fundamental analysis. You can visit admiralmarkets.com, and once you type it on the bar at the top, you're going to see here analytics, weekly trading, podcast. You scroll down and you will be able to use any of these applications to listen to that. Okay. And finally, please make sure you download the mobile application on your device. Thank you so much. Let's go back to the charts. Next one, pound JPY. Look at this, guys. Market is in a clear uptrend. Although slight divergences, negative divergences on the RSI, it moves a little bit choppy towards the 10-period moving average. Very strong market, but the price action here, it's a bit weird. There is no strong price action, so I wouldn't rush to buy this market. I will be waiting for some double bottom. A double bottom or a triple bottom are powerful reversal price action patterns. An inverse head and shoulder, though, will be much more ideally, but it's not a pattern we see often. The inverse head and shoulder, we see more often the head and shoulders. The inverse head and shoulders, it's a reversal bottom pattern. Okay, where the head is here, left shoulder, right shoulder, neckline, and we want to see price push higher. On the side lines about this one, and let's check the gold and the WTI. Gold, weekly chart. A little bit choppy between the 10 and the 40 period moving average on the weekly chart. there is an area of support here, a very strong area of support on the weekly. On the daily chart, though, price broke and closed below the 20-period moving average. The middle line of the Bollinger Band is the 20-period moving average. And this is a great indication. Now, the market today, maybe it's going to continue. There is a high chance that the market will continue to move lower. So how would I prefer to play this? First, I wouldn't do swing trading. I wouldn't do swing trading. Why? Because the higher time frame is not trending. So very low probabilities for swing trading. I see traders, what they do, because they identify the price action pattern on the higher time frame, and they want to do swing trading. Why to do swing trading? The market is not in a defined downtrend or an uptrend. In this case, it's not in a defined downtrend. It's very unlikely that there is a high probability for a swing trading. So often I would see traders that they enter here, for example, short, they have a stop loss there, and God knows when they're going to take 2 to 1. Or they have a stop loss there, and they try to, the market sometimes it's just moving sideways before it continues to the downside. We want to trade fast in the market. We want to go with the flow. And when there is no flow, it's like, imagine you are on you're surfing. And at that moment, you need the waves right then when you are in the water, when you are on the surfing boat. You don't need the water while you are driving to go to the beach. You need the waves. You need the waves when you are right there on the spot. If you don't have the waves, you're not going to surf. Otherwise, it's likely impossible to do surfing without waves. Unless someone experienced something different, you can let me know. Exactly the same with trading. You need the momentum, you need the flow. What is the flow? The flow is when the market is trending, downward or upward. That's where the money flows in the market. That's where there is momentum. That's where there is an agreement between the market participants. So in this case, understanding that there is a possible opportunity because of the clarity on the daily chart, I would have gone to the 15 minutes or 1 hour chart, or even 5-minute chart, depends on your style. On the 1 hour chart, though, I will be looking for a price action set up to sell and only sell. And on the 15-minute chart, I will be looking as well for some kind of complex pullback to enter on the breakout, Same with the 5-minute chart. And for those who are new on the webinars, I should let you know that always when I trade the lower time frames, always I use Bollinger Bands, always. To enter the market, I don't do analysis based on Bollinger Bands, but I do execution based on Bollinger Bands because of the obvious reasons I explained numerous of times. WTI weekly chart, strong area of resistance. It's still this one here, and we wait the market to freely. It's on a there are no obstacles for the market to push higher here. Then on the daily chart, the market is at the top of the Bollinger Band. Therefore, I'm not interested to buy a breakout here. What I'm interested in, what I will be interested to see is the market to move somewhere in the middle of the band. And if I can draw a trend line, an upward trend line, or if this consists with a fib level, ideally 61.8 and a horizontal, then I will be interested to trade. So here is this strong inside support, exactly consists with the 61.8. So 2 levels of confluence. Let's try to get another one. trend line, upward trend line, maybe not that much, but anyhow, we can leave this trend line here. Doesn't bother us, I think. And if the market visits this area of support, there are a strong confluence levels that they indicate the market may push higher. Silver. Weekly chart. I don't understand any structure here. Trying to use a couple of trend lines to map the market, maybe for a triangle pattern, but looks like there is no structure here. So I just better leave this market away. On the lower time frame, though, it's ranging and ranging. And copper. Weekly chart. Bearish engulfing here, but no. There is an inside resistance. Inside resistance here. 1, 2, 1. No, it's not. Yeah, very messy. This one as well. Currencies are more, they have better, higher probabilities than these commodities for the time being. DAX, daily chart. Again, this is messy. It's not trending. It's not ranging. It's just moving very choppy. So what I will be looking for, I will be looking for the market for our chart. These are the boundaries. This can stay there as so that becomes very, very tricky. So ideally, I would like to sell below the hourly candle, and I would like to buy above this hourly candle. But if we're going to buy above this hourly candle, the area of it's about 25 pips, the room for this opportunity. 1.5 minutes for the market to open. Let's check on the 5-minute chart. A pullback. Now, that's how you can go from the hourly to the 5-minute chart, guys. If we want to buy here with a tidy stop loss, we can go to the lower time frame and trying to find a narrow swing and buy the top and place a stop loss below that swing. And in this case, this swing is down here. This swing create this high. So about 24 pips. 1 minute for the London Open. I will prefer to see some price move to the downside, so it give us that topping high swing. Let's see if this is gonna happen. There are no, I'm just checking on the other screen about the little bit wider, from a wider angle. There are no bearish bullish divergences on the daily chart, on the hourly time frame. If we draw some fib Let's check FIP. Pretty much we're gonna get into the 61.8 zone there. Anyhow, I have this sell stop order here. I haven't placed a buy stop order yet. If you like to buy here, guys, be very careful. I could possibly sell this low point here in case the market will make it from there, 20 pips. Let's see if it's going to break to the upside. I'm not into this. I didn't place a buy stop order here. I repeat that. Market is extremely overextended, and I don't want to be in that trade. But saying that, I will place a sell stop order below this swing low. If the market is going to come all the way here, likely it's going to come also all the way down. So I'll cancel this order. My order now is sell stop order right here. Let's see if this is going to close as a bearish engulfing, and it's going to be great. And I will go for I'll go pretty much for a 25 pip stop loss. $26 pip stop loss, guys. And the take profit, it's going to be 2 to 1. I repeat, I didn't place any buy stop order here. I'm interested to mainly sell because of the higher time frame. Let's see if we're going to get triggered in this trade. Do you see, guys, how the price reacts when it touches on the moving averages or on the upper and lower band? It's I'm telling you, it's one of the most powerful ways to trade at least the forex markets and the indices using Bollinger Bands. Guys, any questions? Anyone wants to ask anything? Ruben asked, say that again, please, about the Bollinger Bands. I said that Bollinger Bands, they are because of the way they are constructed. They work based on, let's say, volatility of the market. When the market is not volatile, the price has the tendency to be traded within the bands. And once the price taps into the upside or the downside, the upper or the lower band or the middle band, likely it's going to react. Okay. And the way we like to see the price is one of the most powerful strategies to trade with the Bollinger Bands is once you identified, let's say I want to be a seller. I'm not going to sell the break on the Forex and in the indices. I will never sell. I usually never sell the lower band of the Bollinger. I sell the top from the top band. I see strong price action and I sell it. Okay. And the same with the lower band. If I want to buy, I prefer to see the price when it touches the lower band and then to buy. So 1 minute left for the candle to be completed. Okay, just been completed. So bearish engulfing, strong bearish engulfing. Now traders, they trade order blocks. Usually they will use this area to place some sell limit orders if the price tapped in here to sell it. We are in this trade anyway now. So our stop loss is 27. It's going to be 54 plus the spread 55. So I set up the profit target down here. That's where I will be looking to get out of the trade. Please look at gold. Gold. We talked about gold, Larry. We said that we are looking for some shorts. 5-minute chart, nothing. So it's just messy here. If it's something to trade on the gold, I would rather to be a seller because daily close below here overall is not in an uptrend, is not in a downtrend, but based on the structure here, we see that selling pressure is more appreciated in this market. Pound. Edward asked, Great British Pound USD 1 hour chart, head and shoulder, triple bottom. Let's check the pound. We still have a couple of minutes. 1 hour chart. This has to be zoomed out a lot. It's not a triple bottom. It's not a double bottom. And it can be a head and shoulder reversal. Yes. Head, left shoulder, right shoulder. Neckline, spot on. But where is the issue here? Can anyone? Okay, guys, question for everyone. And for those who are going to watch the webinar later, tell me, this is a very interesting head and shoulder pattern that we see on the chart. But what's the big issue with this pattern? Where do you see this reversal pattern appears? What is the market doing in overall here? Correct. It's in a downtrend. So should be at the top. Exactly. Head and shoulder pattern, it's a reversal, top reversal pattern. So we find head and shoulder patterns. High probability is for a head and shoulder pattern to play out during an uptrend. And it indicates that the uptrend might be coming to the end. With this reversal pattern, confirm that the sellers are in control. Therefore, we can see the price to continue moving lower. But when we find out, when we identify the head and shoulder during a downtrend, and especially a mature downtrend on this time frame, it indicates that this downtrend maybe came to the end and not that the downtrend is meant to continue. Again, we don't use the implication. Head and shoulder always has that predictability to be a pattern that offers for sales, okay, rather than to buy the market. We sell the market. But again, we want this better. We prefer to appear during an uptrend. Dow Jones. Weekly chart, Dow Jones, Market makes higher highs, higher lows. Last week, it was kind of inside. It falls break here. Technically, moving averages, they are the 10 is above the 40. RSI is above 50, and that's bullish. So on the daily chart, there is no kind of structure. I would prefer to see some. I wouldn't rush to sell it because overall is bullish. And there is an obstacle here. There is another obstacle here, support. So if you are selling, be careful about, understand the market structure. Okay, that's all, not be careful. You just understand the market structure. I would rather to be a buyer in this one here with a double bottom, ideally. Bitcoin, let's check the Bitcoin. We still have time. Yesterday, it tried to regain some of the losing momentum here. It's trying to make its way to 26, or it made it to 26,000. Yeah, it's pretty much on the 26,000. As I mentioned, as I explained on the podcast, it's very crucial level, this 26, 25. If the price will break below the 25 and maintain a downtrend, it's going to be very, very obvious. And let me share something with you. If you check the monthly chart, it's in a strong downtrend, or it was the weekly chart. This pattern here, this double top pattern from here to there with a neckline here, it hasn't completed yet. So I would expect the market to trade way below the 15,000, but let's take it case by case. So we'll see what's going to happen. You see price action, bearish candle, closes below the 40 period moving average, 4 weeks in a row. That's the fifth one. Price action is not moving. So buyers are not there, but also sellers are not here. So let's see if the price is going to push below. If it's going to move below, the next level is at the 20,000 as per technical analysis. Yeah. All DAX. Okay. I don't know if you guys are still with me on the trade. I haven't closed the position yet. Let's see what's going to happen here. Still on the trade. Stop loss, it's in place. Take profit also, it's in place down there. So guys, we have to wrap up for today. And thank you so much for your participation. I hope you enjoy the webinar. And I look forward to see you tomorrow again at the same time. Thank you, everyone.